jobs report was solid and signaled the American economy is nowhere near recession territory. But this report also signals not so good news for those of you waiting for those interest rates to go down. I'm going to tell you why in a second. First, today's jobs report came in better than expected, with the labor market adding about 200,000 jobs and the unemployment number going down to 3.7% in the month of November. These numbers did account for the workers who were on strike in November too. The report found even the number of people who have been long-term unemployed decreased both since last month and since last year. So where are all these new jobs? Mostly in the healthcare sector, but also in government, leisure and hospitality, and in manufacturing. So when you add all those sectors together, along with all the other ones I didn't mention, you get almost 200,000 jobs added to the payrolls in November. That's solid growth, but definitely not the explosive jobs growth we were seeing last year. And that's exactly what the Federal Reserve wants to see, a cooling off of the amount of jobs being added, which eventually cools down inflation too. But it's not yet enough. Here's where the interest rates come in. The Federal Reserve is going to be meeting next week to decide whether they should increase, pause, or decrease interest rates. They will take into consideration a lot of different factors, including this jobs report, to make that decision. It's almost certain, based on this report and others that I've reported on this channel, a decrease in interest rates is not an option this month. An increase in interest rates is also pretty unlikely because the recent economic reports have showed that the higher rates are having a positive impact in bringing that inflation down. So the most likely scenario is the Fed's going to be pausing interest rates again this month. But what about the future? What about 2024? When are these rates going to start coming down? Well, the Federal Reserve Chairman has forecasted that we could start seeing rate cuts in the spring or summer of 2024. But if the economic reports like this one keep showing that inflation isn't trending downwards enough, it will take the Federal Reserve longer to feel confident enough to cut the rates.